Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for Thursday, October 7th, 2021 at 6:21 p.m. Central Time. Well, an interesting day. I wish I could call the markets as well as I did this political situation. You know, the reason we're getting a debt ceiling done right now is because next week the senators want to go home to the constituents for a week. If you think it's different than that, boy, are you wrong. That is what it's about. So they're going to vote tonight at 7:30, in about another hour, and I'm talking Eastern. Well, maybe they're voting at 6:30 Chicago time. The vote was at 7:30. That might have been Eastern time. They're about ready to have that vote. Thank God, because I've been watching the Chicago White Sox getting their butt kicked by the Houston Astros, so I'd rather watch the vote. And what we're really doing is kicking the can down to December 3rd, which was an interesting date to begin with for me. And Mitch McConnell gave enough of an increase agreement to the Democrats to get this part done. So how did the markets react? They loved it. Stock market roared on the news. You're still up again. We've gotten to that point where that September break is being met by the very volatile early September trade. Yes, I expected that to be the case as well. But December 3rd's interesting. Why? It takes several weeks to get done the bill if you're going to argue them for the full debate in the Senate before a bill gets passed. It can take a couple of weeks. Okay, so let's see, the 3rd, and then we're at the 10th, and then the 17th for 2 weeks. Now, Christmas is the 25th. Do you think any senators are going to not pass a bill that keeps them in their chambers at the Senate to pass something and blow their Christmas holiday? You might. I'm betting the ranch that isn't the case. So that forces another part, and I think that's why Mitch McConnell picked the 3rd. I could be wrong, but I've been around this. I'm old enough that I've seen plenty of politics in my day, and I hate politics, but I understand it. And at least I think I do. So that's what I think was done there. So the good news is the whole world breathed. The U.S. isn't going to default. The checks are still going out for Social Security. One last thing, and I'll move off this because it cracks me up. Can you imagine they don't agree on a debt ceiling? Then we have to shut down the government, and for Christmas, the Social Security checks don't go out. You believe that in your wildest dream? If you do, maybe you want to buy shares in one of the bridges that are out there. Used to be the old days, you'd say the Brooklyn Bridge, but a lot of the bridges were bought by Macquarie and other companies over the years. All right. If you look at the S&P 500 index, where are you fighting? The 18-week moving average of closes. Classic what I teach. If you've taken my full charting course, this is exactly what I teach. Matches up down there. It matches up back in areas over here. So this could be where the market finally makes a stand. I'm not predicting it is or isn't. It could be that area finally. When we take a look at the action through all this, we put the swing line on to get an understanding. If you think I could see the highs and the lows, where the peaks and valleys are, basis this, you give me a lot more credit than I deserve, because I can't. But when I put the swing line on, I know I'm back in a bull trend. I have higher lows and higher highs. I like that. Until 42.69 is taken out, the trend is up. Now we filter it. Are you over the 18-day average? Oh, yeah, you are. So now you've got the bias up, because bias is determined where the price is in relation, at least the way I teach it, to the 18-day average of closes. When you're over it, the bias is up. So we have the trend up, bias up, and in good part, the 100-day average did its job of holding the market and came back to the 18-day average. So the 100-day average, that I might have said 18, the 100-day did its job of holding right in there. But there's another number that held the market too, and that's the lower Bollinger Bands. That was the safety net under the market, and you've kicked everything up. So going home, at this point, you have higher lows, higher highs, trend up, bias up, held the Bollinger Band and the 100-day average. If you fall from here, look for your first support at the 100. If the market rallies from here, the potential's back to the 44.87 area, wherever that upper Bollinger Band is, and momentum is up. The bulls took control of the market again. When I come to the NASDAQ, not the same case. You have a lower low, higher high, a complete different pattern. Resistance, the 18-day average of closes, and it's been there. This is not the place to be yet. In the Dow, this is one of the places to be. Higher lows, higher highs. Yesterday, which is Thursday. Well, isn't today Thursday? Remember, we're already in Friday trade. The market finished up and over both of these numbers, putting into play the potential for the upper Bollinger Band, and that's where you're at right now. I would look now for support back to the 18-day average, and these two layers act as it. Is this market a buy? Would I tell people to buy it? Well, I can tell you what I would tell people. It doesn't mean I'm right. You're overbought. Overbought in an uptrend? I'll let somebody else own it. Russell 2000. Defining this whole area. So you were able today to finally get back up and over, if you take a look at this, these moving averages, the 100, the 18, the 200, 200, the 18, and the 100, fighting its battle there. Maybe it ends up in the Bollinger Band area, and that's pretty much what the market is doing. Is the trend up? Yes. Should the market find support on breaks back to the 18-day average? Yes. Could it find first support at the 100? Yes. Next, we look at what the VIX is doing, and it's got to fill in for a minute. Okay, there we go. So the VIX is in a downtrend, which adds more credence that we've just seen a low in stock indices as a group. Lower highs, lower lows. First major support should be the 200-day average. If that gives ground, then the 100 again. And if that gives ground, the lower Bollinger Band. You're oversold, however. Any reading under 30 is an oversold condition. I don't see much to do there. T-bonds, I'm still very much in the bear camp. I think the Fed's going to begin its tapering. I think it's all systems go. If the unemployment number comes in a good number, they're looking for 500,000 new jobs tomorrow. That seems to be the median guess. You'll taper, and then I don't know when they'll do the interest rate hikes, but the market will do that. They don't need the Fed to do that. The market will tell you where you're at. The market seems to be very comfortable trading in the mid, let's call it the mid to high 1.58, 1.54 region in the 10-year note, down currently into the like 1.4 range, back and forth there. And when you take a look at the 10-year, you see you're in a downtrend. Is the market oversold? Oh, yeah. What else do we look at? Both numbers tonight are under 20, but you can't go by Friday, so you got to go here. Both numbers were not under 20. Really nothing to do other than an oversold market there. Dollar index. Will the market take out this high or come back to wherever the 18-day average is? I'm still betting, with no money, but betting that it won't take out that high. It'll try to make its run to the 18-day average first. In the eurocurrency, it still looks bearish to me. If the Fed's going to begin the tapering process and the market wants to price in higher rates and we don't have the debt ceiling issue in front of us, well, I don't think that's so bullish on the eurocurrency. That's what the chart is saying. In the British pound, you have momentum up. You've gone into a stall. The last rally high right here, this is an important number, 136.48. You came up today, you hit 136.40, and tonight you're at 136.19. You can see that's your resistance point. If you're going to keep a downtrend, you can't afford to take out this 136.48. You need to break under there. And if you can get under this number, then maybe 134.37. Obviously, we know all the problems that the UK is feeling right now, the lorry drivers, the inflation numbers, what's the Bank of England going to do? It's a mess for them. In Bitcoin, you keep running on the upper Bollinger Band. This is the Gorilla Glue trade. Don't you like that name? And what does it mean? You lock in on that number, and that's just a sign of immense strength. Now, I teach never to buy an upper Bollinger Band. Some people like to buy them. I don't. I teach for many reasons not to, and I teach it in my enhanced Bollinger Band course. But if you take a look here, you got an overbought market that is trying to embed. Let it embed, then I'm going to get really friendly to the market again. Long term, I'm very friendly to that market. In the Brent versus WTI crude, still up and away. So you get these little bitty breaks as Saudi Aramco goes, we're going to be very, very friendly to you. We're only going to charge you $1.30 over the price. The premium will be over the quoted price of Brent in different regions. That's wonderful of them. We're not going to put too much oil back on the market because we could always get that other COVID outbreak that isn't even on the horizon, but we got to be prepared. We got to do what's right. And then, as you know, President Putin runs out and goes, I'm going to rescue the day for Europe. We're going to make more natural gas available. Now, 1 week ago, his energy minister said they have to produce more for themselves. Their stockpiles are low there. Get politics, that's what's going on. But they won't give you enough to make a major break. You'll get a sharp break off of a market that gets overbought, and then there's supply. Then it comes down and you realize, well, how much oil you're going to get, what's going to happen, or how much natural gas you're going to get. In Brent crude, does anything here look bearish to you? If so, write me and explain to me what you see that looks bearish. I see an embedded reading, higher lows, higher highs. Market keeps breaking back down, letting you in, just the way that I teach trading, and going back up to the upper Bollinger Band. Same in the WTI. It looks very bullish to me still. And in heating oil, I think I screwed up something last night in my written updates. When the market was over here, I was telling my traders to buy today. And because it opened up and went there, where I ended up having them buy was too high. I wanted them back in here, and it's just the timing as to when I put out the update. And when I saw the rally happening during the day, I realized what I had done, and I just told them to take some profit. So that's what I did. It's always not a profit word. It could have been I told them to take a loss, but in this case it was take profit if they were in the trade, and it worked out very nice. But I screwed something up. I haven't figured out what I did wrong there. Nat gas, where do you think the support should be after you hit an upper Bollinger Band? Here you are. If you break down from them, the 18-day average could be a support zone. That's where you want, and that's what you're doing. So, interesting times in the market. I'm worn out tonight from watching all this. I've been up since 3:30 in the morning. So it's one of those days where I'm worn out, but I have a lot more to say, so watch this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.